Welcome again for the forecasting of balance sheet. Just want to thank you. I want to take this opportunity to thank you for following my videos. Please kindly like, share and subscribe to the channel so that you can continue getting the videos of our financial analysis series. So we are directly going to handle the forecast balance sheet for the next 12 months, and as you can see here, we have, this is now the balance sheet. We have the cash. So cash, basically the cash, we get it from the cash flow statement, which is the cash at the end of the month. So basically, to get cash above there, we're going to get cash from there, though we still don't have that value, so it will come to 0, but it will fail as we go. Then we have trade and other receivables. To get this, we simply get trade and other receivables. Trade and other receivables are here. So we have the receivable days. We get that by dividing it by the number of days in the period. Then we multiply by revenue, which is done. So we fill that right, and those are our trade and receivables. Then inventories, we get that by getting the inventory days. This is the inventory day for that month, divided by the number of days in the period. Then we multiply by the cost of goods sold. The cost of goods sold for January is this. Cost of goods sold for January is that. So we fill that right, and we are able to get that. So from there, we can now calculate the total current assets, by getting the sum of cash, trade and other receivables and inventories. Then we can simply fill that right to get the ones for the rest of the period. Then after that, we go to property and equipment net. To get this, we go to our supporting schedules, which we calculated earlier, and these ones were the values. We have the PP, we have at the start of the month capital expenditure, then we have the accumulative depreciation. So as you can see here, we have at the end of the month accumulated depreciation will be the same as the beginning of the month of January. So this one is equal to that. Then to get now the accumulated depreciation, we simply add this. We simply add that. Then if we fill this right, those values are going to come. You can also fill this right, because we already have that formula. Then we are able to get that. So now to get the net book value of PP&A, we're simply going to get the difference between this and that, and that is now the net book value of our P&P. So when we come back here to our P&P, we can simply now equate it to this value here. the value which we have just calculated. That. Then we can simply fill this right now to get the net book value of the rest of the months. Then now the total assets is equal to the sum of total current assets plus property, plant and equipment net. So we're simply going to shift arrow, shift right, then control R to fill that to the right. So we have the liabilities part where we have trade and other trade payables. That one we are going to get by the number of days, payable days, divided by the number of days in the period. Then we multiply by the cost of goods sold, which is here. And let's put it to be positive. Yes, so we fill that right. Then boom, we get that. So we also have the term loan. The term loan we can get it from down here. We had the term loan which we had calculated, the one for closing balance. The term loan we are going to get it by doing that, filling right. Then there is our term loan. So now to get the total liability is simply going to be R to equal that. We fill that also right. Then we get that. Okay. Then we have the common stock and paid in capital. Common stock and paid in capital, we can simply go up here from our assumption and check what did they raise any equity for all this period. We don't see where they increase any equity by issuing any common stock. So it means that our common stock is going to remain the same for the period because there were no addition, or simply you can put it is equal to this plus any issuance. Come back here. Then simply going to go across. Okay, so that's what we have. Then we have the retained earnings. Retained earnings is going to be this plus net income. Net income, we can get it from here. Then we subtract any dividends which were paid. So that is going to be our net income, our retained earnings. So we simply move that right, control R to get our retaining earnings for the period to come. Then the total shareholders equity is the same as, or simply you can get the sum of these two, the common stock and retained earnings, to get the total shareholders equity. Then there we are. We fill that right, and kaboom. Then we can now get the total liabilities and the total shareholders equity, which is the same as this plus that. We fill that right, And as you can see,